Hey, what's up guys? Back with another video. Today I'm going to get into saving for college. Now this goes out to parents and this one goes out to students. So I'm going to do two separate sections in this video, one for parents and or students and one for students. So let's get started. So first off, as we know, college, higher education, higher institutions, things after high school or public education that we can go to. So a lot of times, a lot of us want to go and get degrees. A lot of us want to go and see what we can do to better ourselves in the workforce, to get more experience from schooling and then get more internships, get a lot of job experience. So we go to college. Now, the thing is about college, it's not necessarily inexpensive. Which cases, sometimes, my personal experience going to University of Tampa, definitely not the most inexpensive college. I would tell you that. It's very expensive to go there, but grant scholarships, thank God, everything's all good. But the thing is about college is that you have to save for it, regardless of anything. This goes for parents wanting to save for their children. This goes for students wanting to save for their college in the future. This goes for students at college right now that want to get by without having to live dollar to dollar every single week. So I'm going to get into what you can do. And the information I'm going to give straight from the book is about savings plans. Now you have two types of savings plan. Give it to you right now. You have a prepaid tuition and you have a 529. Now the prepaid tuition is not as popular as the 529, which has a lot more attributes upon it, but I'm going to get into it anyways. The prepaid tuition plan says it allows anyone, a parent, guardian, family friend, etc., to establish an account which they are the account owner in the name of a student, which is the beneficiary, so the person that they're going to pay to go to college for. So if it's your mom, they're going to pay for you to go to college. Your friend wants to pay for you to go to college, they can do that. Prepaid tuition plan, they lock in the cost of a specific number of the academic periods or units at current prices. Current prices, not future prices, not past prices, but current prices. And then those units will be used in the future. So basically what it's saying is that somebody can create an account for you to go to college, and with the current number of units for however many classes you're going to take, lock in that amount of money and that rate. And whatever money amount they get, it will be used in the future to pay for your college. Prepaid tuition. That's as basic, as simple as it gets. Now, the thing is that the prepaid tuition plans, they don't have an investment risk because you're not investing against anything. The only thing is that it provides a hedge against increased tuition costs. In case anything happens, they provide a hedge against it. Now, it says it's available for all levels of education, including grammar school, high school, public college, and universities and trade schools. So that means technically, you're going somewhere that needs tuition paid, you can save up. Grammar school, high school, if you're going to a private high school, you could pay for that as tuition. You could pay for public college, universities, etc. So it's not just based upon universities, but prepaid tuition can go to any private school or whatever school you're going to that requires you to have tuition paid, which is really good. And 529 plan, which is called an education savings plan, that is the more popular one out of the prepaid tuition or qualified plans, as we per se. It says it allows anybody, once again, anybody, parent, guardian, family, friend, to contribute to an account, which they are the account holder as well, that will be used to pay a beneficiary's qualified education expense, which means tuition, fees, books, board, room, etc. So the difference between that prepaid tuition plan is that A is just for the academic units is the prepaid tuition plan. The 529 pays basically for everything. Pays for your room, your books, your tuition, your board, everything. So basically your all around college experience it pays for. It says the value of that savings plan, however, unlike the prepaid tuition plan, the 529 savings plan is gone against investments, which means that it is based on your investment performance. See, you're not investing anything with a prepaid tuition plan. You're just doing units, academic units, and then the rate that you're going to get. So you put in the specific number of academic units at current prices. That's it. But for a 529, you are investing in it, which means that it's going against the market. Now, the account owner bears the investment risk. But the thing is, the earnings accumulate tax-free. So you're good. You don't got to worry about paying taxes on trying to pay for tuition or pay for room and board, etc. So that's the good thing about it. So the thing is with 529s is that they are not mutual funds because they might have an investment option, but there are options just regular investments that are chosen by the account holder. So it's not a mutual fund. You don't worry about having shares of Class A, Class B, etc. You don't have to worry about that. You're just bearing your investments against the market. So you're going and investing your tuition per se, or your savings for your tuition in the market. That's the only risk it has, really. So prepaid tuition, it may sound good, but remember, you're locking it in at current prices. Now, it does hedge against inflation, aka increased tuition costs, if that has anything that may scare you. But at the same time, you have to understand 529 plans mean a little bit higher risk, but also higher reward. So you may not have to worry about anything. Prepaid tuition, you may or may not have to worry about a little bit. It just depends on what you want to invest, how much you want to invest. So, contributions. For prepaid tuition plans, the maximum amount you can contribute is the number of years or units of tuition offered by the state. To prepay, that is. Savings plans, the maximum contribution limit can be set at more than $300,000 depending on the state. Now, keyword, depending on the state. So don't go and say I told you, hey, $300,000, I can invest at any time, or I can invest as much as he said. No, depending on the state. So read your rules, regulations, do your due diligence, and you will understand how much you can contribute for a savings plan. And the thing is, 529 savings plans are not deductible on a federal tax return. So sorry, you can't really deduct that. And 529 plans grow tax-free, and the distributions, so that means when it's time to pay, when it's time for you to get that money that you've been investing, it's time to pay from that 529, they are tax-free when used for qualified education expenses. Now, you got to do your due diligence, understand what qualified means for your state. So if it's for room, board, books, tuition, then it's tax-free. You don't have to pay a dime on what you have from that 529 plan that is your investment. But it says qualified. Remember, qualified. Don't say I told you. The book said, oh, non-qualified. No, it's qualified. So understand what your state is saying is qualified for that university. And really, prepaid tuition, 529, they both are good. It just depends on what you want to do. I'm not giving you advice. I'm just saying this is the information. You can take it as you please. So if you're a parent right now, you're a student right now, you're trying to save up for college, or if you're a parent, you're trying to get your child through private schools and you want to save up for that, maybe prepaid tuition is your goal, or maybe it's not. Maybe you just want to save up for college or your room, books, and board. If that applies to that, 529 is the way to go for you. But that's not advice. I'm just telling you that may be your path that you want to take. Think it's about 529 plans as well. One student per account. So you're not going to be able to load up 3 people on one account. It's one student per account. You don't have to have a personal relationship between the parties. Like I said, it could be family, guardian, friend. Doesn't matter. Somebody can set up an account for you, say they love you that much, invest for you. And another thing is that the assets can be transferred tax-free to another 529 plan for the same beneficiary during a 12-month period. So if you want to take it out of one plan into another within a 1-year period, it can be transferred tax-free once during a 12-month period. And if you decide, well, not you, but say if the student, or if you are the person that's investing, does not decide to pursue the education. So let's just say, oh yeah, your kids say I want to go to college, but they don't want to now. The account holder may have they may request a refund, but not may. You will be subject to a 10% federal tax penalty because you're doing that investing. So when the disbursements / distributions are supposed to be tax-free when you pursue the education, now you're saying I don't want to do it. And then when you don't do it, the government's going to say, okay, now you wasted time. So now it's time for us to get our money from you because you're not using it for its intended purpose. So you will be subject to federal income tax and a 10% tax penalty. Well, federal penalty, but still, you're subject to be taxed now. So if you don't use it at all, you're going to be taxed. So maybe you want to use it. And it says the 529 plan is generally set up by states, and policy penalties and the 10% penalty will not apply in the case of a student's death, disability, or receipt of a scholarship. So take all this information, and if you're saving for college, you're saving for higher education, you're saving for anything that has to do with education, prepaid tuition, 529, way to go. That's your decision. But now, quickly, I want to get into students saving for college. Now, me being a, not so fresh graduate, but graduating last May from the University of Tampa, key advice is just another mindset thing. Like I said in my other previous videos, a mindset thing for you to have is that when you're saving for college, or if you're trying to make it through week by week, let's face it. I mean, me personally, I'm not a party person. I didn't party in college. It was all business for me. But the thing is, I know a lot of people like to be loose, have fun. A lot of people like to go and say, "Oh, I need to take the edge off and relax." Okay, you do what you want to do. But the thing is, like I said in budgeting, wants and needs. So if you're in college right now and you're saying, "Man, I really need the money. I can't keep borrowing money from people." You're gonna have to save. Think about it as a necessity. You have to save for the semester. You have to save for food. You have to save for drinks, water. You have to save for things that are necessities. You gotta save things for the bathroom, save for things that you need, etc. Save for books. Books are probably the most expensive thing besides tuition. We don't care about tuition right now. We're talking about books. Books are the most expensive thing in college besides tuition. That's from my perspective. So obviously go on Amazon, etc. But going to the bookstore is expensive. So you have to understand that once you put your mind into where you want a want and where you want a need, you will know that college is definitely something that's to be taken seriously, not lightly. Yeah, everybody wants to party, but you need to know that saving up for college is a necessity because you're going for higher education. Now, people can spend money the way they want. I'm not telling you how to spend money. I'm just telling you that if you want to do smart financial decisions in life, you're gonna have to start saving, start cutting back, start making things a priority. Make saving up money priority. Make not going out for one night a priority because you don't have to do it. All you have to do is just do your grind, do your work, and then maybe one week or another you can go ahead and relax. But my whole thing is to inspire people, tell you, look, the mindset right now is that you get the job done and then you can go and relax later. Because when you front load work and you get it done, you have more time to rest. You have more time to relax. You have more free time. That's my whole motto right there. Work hard in the beginning, so that way once it comes towards the end, you have time to coast. And then when the end comes, you're just dominated because you have all the knowledge stored in the forefront. You don't have to wait to the back end to try and catch up. We don't play catch up. We're starting strong, we're going to finish strong. But in between, if we have to coast, we can coast, but we're going to start strong and finish strong. It's not we're going to start slow and try to finish strong. You start strong, you finish strong, and you get it done. So that's it for today. Thanks, guys, for watching. Thanks, guys, for tuning in. Till the next video, I don't know what it's going to be about, but I have something in mind. So once again, thanks for watching. Please tune in next time.